I think conventional corporate finance treats capital as it's toxic. Capital is toxic to the corporation, and I think capital is virtuous, right? What rich family would give away all their money, right? But every rich company does. Apple does, Microsoft does, Nvidia does, Meta does. They all brag about the doing of it. They all brag about their buybacks. They all brag about their dividends. It's like they're literally getting rid of their capital as fast as they can. And you know, why would all these people that you're invested in that you think are so smart, if they're so smart, why are they desperate to get rid of the money?
Apple, Microsoft, and Nvidia aren't building wealth. They're burning it away through stock buybacks and dividends, a cycle that ensures their cash loses value over time. That's the message from Michael Saylor, founder and executive chairman of MicroStrategy. According to Saylor, corporations treat capital like a liability because it is in today's financial system. Negative real yields on bonds, relentless inflation, and a broken economic model force companies to shed cash as fast as possible. Saylor believes that Bitcoin is the only way to escape this financial dilemma. Unlike traditional assets that decay over time, Bitcoin offers a way to preserve and multiply capital. It's the lifeboat from a sinking system, but Wall Street doesn't want businesses or individuals to realize it. Because if they do, the entire financial power structure could collapse overnight. Make sure to stick around until the end of the video, as Michael Saylor shows why Bitcoin is the only hedge against the system. Also guys, only a small percentage of my viewers subscribe. If you enjoy staying updated with finance content, consider subscribing or liking the video. It's free, and you can always change your mind. Michael Saylor shares his insights on Bitcoin and the failing financial system.
I kind of feel like there's a certain natural selection to this. If you like money, if you need the money, if you're willing to take risk and you're willing to bleed to get the money, then Bitcoin will give you the money. But those are the people that deserve it. If you're just rich and arrogant and you only take risk-free investments and you just expect to stay rich, then, you really want to help them? Do they need help, right? I mean, I don't think so. So I think the volatility is a feature that's a benefit to an investor. It's a benefit to a corporation. It's a natural characteristic of a life form. It's alive. It's vital. It's volatile. I think that there are two big ideas in corporate finance that are traditional, Morgan. One, volatility is a bug. And I think volatility is a feature. And two, and I'm going to say this in a hyperbolic way, but to make the point, I think conventional corporate finance treats capital as it's toxic. Capital is toxic to the corporation, and I think capital is virtuous, right? What rich family would give away all their money? But every rich company does, right? Apple does, Microsoft does, Nvidia does. They all brag about the doing of it. They all brag about their buybacks. They all brag about their dividends. It's like they're literally getting rid of their capital as fast as they can. And why would all these people that you're invested in that you think are so smart, if they're so smart, why are they desperate to get rid of the money? And the answer is the capital asset they use is toxic to them. If I give you $1 billion and you invest it in bonds that have a negative real yield of minus 10%, then you're destroying $100 million a year. So if they're smart and they know that, they know they have to get rid of the capital. They have to flush it out of the system as fast as possible. And I think that there's a new idea. The new idea is adopt a different capital asset called Bitcoin, and you get to keep the money. And now capital is not toxic. Now capital is life affirming. Now instead of blowing away $100 billion of capital, now you could keep the $100 billion of capital and it grows 30–40% a year, and pretty soon you've got $500 billion of capital and your shareholders get rich. That's the big idea. Bitcoin is on a need-to-know basis. If you don't need to know, then you won't ever figure it out. So Microsoft is arguably right. Microsoft is one of the 7 greatest companies in the world. Maybe it's the greatest company in the world, but some people might think it's the first or the second or the third. So if you run the greatest company in the world and you're a shareholder in the greatest company in the world, arguably you don't need to know anything. You don't need to take any risk. The companies that are going to embrace Bitcoin are the ones that aren't Microsoft. When you get to the point where you realize you can't compete against Microsoft, when you're not the digital monopoly, when you're one of the 27,000 retailers that got crushed underfoot by Amazon, right? When you're one of the 47,000 media companies getting beat to death by Google or by Meta, when you look at your stock and it's been stuck in a rut for a decade, right? If you're the CEO or the CFO of that company and you ask yourself honestly, am I going to be able to outperform Nvidia or outperform Google or outperform Apple? Do I have a monopoly on 1 billion people? Do I or not?
Michael Saylor sees Bitcoin's volatility as a major advantage, not a flaw. In his view, those willing to take risks and endure market swings are the ones who stand to benefit the most. Traditional corporate finance, however, treats capital like a liability, with companies like Apple, Microsoft, and Nvidia rushing to dump cash through stock buybacks and dividends. This approach, Saylor argues, stems from a broken financial system where holding capital in bonds with negative real yields erodes value over time. Instead of playing that game, he believes businesses should turn to Bitcoin as a powerful capital asset, one that preserves wealth and has the potential to drive massive gains. While giants like Microsoft may ignore Bitcoin, others, especially companies looking to compete or disrupt the market, are more likely to recognize its strategic value and take the leap. Now, let's return to Michael Saylor for more insights.
If you have a digital monopoly that's unregulated, you can actually outperform until you get regulated. The companies that are embracing Bitcoin are the ones that they're the zombie companies where there's like, I'm public, but I'm stuck in a rut. The likelihood that I'm going to start to grow organically 20% every year for the next decade is like less than 1%, right? Once you get to the point where your odds of actually, growing organically 20% a year for the next 10 years are less than 1%, then at least at that point, you need to consider a new idea. And I think normally what happens is when a company hits that wall, they decide to sell themselves, right? That's one exit. I just sell the company. I had 100 competitors, Morgan. Every one of them sold themselves over the course of 20 years. Every one. So you sell yourself. If you can't sell yourself, your next idea is LBO. I'm going to take myself private. I'm going to here's the big idea. I have a low growth company growing 5%, but if I can borrow money, cheap capital, and lever up, then I can actually make my low growth company look like a high growth equity. Who does that? Apple's been doing that for 5 years, right? Borrow money, buy the stock back, lever up the equity. So sometimes they go and do an LBO. Third, they work themselves to death until they have a heart attack, in frustration. I think I tried 25 different things to break out of a rut before I discovered Bitcoin. I bought the stock back. I spent money on marketing. I invented 20 products. And it's just like hitting your head against the wall. So sometimes they do that and they just give up and they retire in dejection. And now you've got this fourth idea, adopt digital capital, right? Recapitalize your company, invert your balance sheet. That's the new opportunity. I think, Bitcoin's a paradigm shift. And if you study paradigm shifts, Thomas Kuhn, he says people only embrace new paradigms when there's a war, right? Or when they die, right? Like science advances one funeral at a time, right? One of the famous quotes. In this particular case, who gets crypto? Who gets Bitcoin? The 20-somethings. A 20-something business person, they have no money, they have no hope. They're not going to get ahead the way their father or their grandparents did, right? And so you're a teenager or a 20-something or a 30-something, you're like streaming, YouTube, crypto, something. They have everything to gain, nothing to lose. And then you have people that are caught up in a war, whether it's the COVID war or the lockdown or, guess what? My bank just stole all my money in Lebanon or a meltdown. Those are the companies that will flip first. The vote, by the way, at Microsoft was 99.5% against 50 basis points in favor of, the proposal was investigate Bitcoin. That was research Bitcoin, and management recommended they wouldn't, and it was 50 basis points voted in favor. And I think it's just demonstrative of the point that, if you've got a great company and happy shareholders, people don't change. But that's okay, because rich, successful people that don't need money don't have any need to reconsider the monetary proposition, right? Bitcoin is money for people that need it. It's not money for people that have too much of it already. or already have a way to get it. So there's a natural selection here, and there's a certain elegance to the entire process by which this idea spreads.
Michael Saylor points out the growing divide between companies with monopolistic power and those without it. According to him, businesses lacking monopolies or significant digital dominance face mounting pressures that often lead them to desperate measures such as selling themselves, leveraging buyouts, or overextending their operations. Meanwhile, companies with unregulated monopolies, like Microsoft, can continue thriving until stricter regulations emerge. Saylor sees Bitcoin as a lifeline for struggling organizations, offering a way to recapitalize and transform their balance sheets. He believes businesses on the brink, or those with little to lose, are far more likely to adopt bold strategies, such as embracing Bitcoin, to reverse their fortunes. Similarly, younger individuals often lack significant financial resources and are more inclined to explore Bitcoin as an alternative to traditional financial systems. Before we go, if you want to stay most up to date on the crypto and Bitcoin world, subscribe to my daily 5-minute crypto newsletter. It's a concise resource for the latest expert predictions, breaking news, and top on-chain analysis, trusted by over 50,000 subscribers for insightful crypto investment information. Don't miss out on the opportunity to stay informed in the crypto market. The link is in the description below. I hope you all enjoyed today's video and that it gave you some value. I'll see you all in the next one, and as always, all the best.